A continuación tendremos un
I'm
panel
going back to
sobre la
Spanish now. Now we have
digitalización
a panel
para terminar
on the digitalization of pensions.
cómo
This will
cambian
be the last section. How pension systems change with technology. We have three specialists today with us who will tell us about their experiences with these very important topics. We have Alejandro Barrios, international consultant on digital development, and he is a professor at the University of Chile. Cicero Diaz, also in charge of public and federal employee pension systems in Chile, in Brazil, and Gautam Barda, the founder and CEO of Pinbox. Then I will start with our first panelist, Alejandro, who has a master's in computer sciences from the University of Chile. He is a director of IPACMELO and director of strategic strategy in Chile. He's a consultant for companies and institutions, and he's specialized in strategic technological planning, technological policies, digital governance, public expenditures, or procurement, and he's been a consultant to UNDP, World Bank, the European Economic Community, ECLAC, and the Inter-American Development Bank. He has also worked as a legal expert in the Chilean legal system, as a professor in several universities, and as a presenter in international and national conferences. Currently, he's part of the public systems for civil and industrial engineering in Chile as an assistant or advisory professor. You have 12 minutes and you'll hear the bell when you have 2 minutes left for your presentation. Go ahead, please. Thank you very much, Paulina. Can you hear me okay? That's great. Can you see my presentation? Yes, we can see it. Go ahead, please. First of all, thank you for inviting me. In these 12 minutes that I have to speak with you, I want to talk about some challenges that pension systems are facing in terms of better using technologies and making a deeper use, taking better advantage of digital technologies for different aspects of their business. But I think we first need to talk about the context in which these technologies will be operating, see where we are right now, what challenges we have in the future, and how the digital transformation is linked to pension systems. We had a certain pre-COVID context where we were seeking to modernize and digitalize the governments. And these consisted of 5 important elements that I'd like to highlight. Our countries do have some areas of poverty where there is no Wi-Fi connectivity or there's low quality Wi-Fi, but these pockets have been shrinking and decreasing in size, and the governments have policies to provide better connectivity to their citizens. So we've seen significant progress with public institutions. Another element of the context in the region that has an impact on this digitalization process is diversity. We have countries where diversity is there to stay, and diversity throughout various different dimensions, gender, ethnic group, language, and other elements as a result of migrations, for example, and of other movements. Today, we have a very diverse society, and any service that the government wants to provide to its citizens must take that diversity into account. An example that I can give you from Chile is that those services provided to citizens For example, there are some immigrants from Haiti. They speak a different language. We provide services in Creole as well as in Spanish. So these are some of the examples, or different ethnic groups as well. So a contextual element when we design these services is that this, and it needs to be taken into account. A fourth point is that currently citizens are adopting a paradigm of an interaction of how they interact with other institutions, private institutions such as banks or insurance companies. So it's a habit already now to interact digitally with these institutions, and thus they expect similar services from the public sector. And also, we now have more empowered citizens. We've had social movements, but also citizens today have different tools that help them exercise their rights. And so they are more likely to place certain demands regarding, and have certain expectations regarding the services they receive. So that's the context. And what has happened with the digitalization process in the public sector? We don't have time to go into too much detail here, but we can talk about at least 5 generations in this digitalization process. Starting in the beginning of the 90s, when what happened basically was that greater technology infrastructure was built for these services, and these were mostly internal processes. And as the years go by, we see increasingly we get closer to the phase where there's an interaction between the citizens through these technologies, through IT support in the 2000s, then web portals, and then the new forms now, the new formats where I can provide services in accordance with the expectations of the citizens. So these are some iterations, some changes first started inside in the in-house, and all the way now to that service window where there's that direct interaction with the customer. Up until before the pandemic, this was our situation from the perspective of our situation in general. This was a study done by the IDB on the processes that you could start online and which ones you could conclude online. Those are the gray bars. And the dotted line are those processes that you could begin at the same time online in the European Union. And as you can see, only 2 countries were above that threshold, Uruguay and Mexico, and all the rest of them were below the European Union, and many were far below the level at the European Union. That was a situation before COVID. Then COVID came along and the world changed, not just because of COVID, but due to different circumstances. Some of them have been mentioned in previous panels. And I'd like to see these as new elements of the context when we think about digital transformation strategies and processes. In the region, we've had significant social movements in Chile and Ecuador and Colombia. We've seen this in Argentina, in several countries. We've seen social movements, greater or lesser significance, where the citizens express their demands of certain services. And COVID, we've been living with it for almost 2 years, and it's been forcing an interaction by digital means. And many of the countries in the region have defined regulatory frameworks in order to implement digital transformation processes. At least 3 or 4 countries already have laws about this that establish how you should implement in the public sphere, in the central government, as well as in local governments, the interaction with citizens and how it should develop. And this has also mentioned in previous panels. This will have an effect on public employment from the point of view of automation and a change in certain roles and functions. So this is the context in which digital transformation processes are taking place today, and these are the challenges it must face. And when we talk about a digital transformation, perhaps the first question we should ask ourselves is, what is this digital transformation based on? And here I'll give you 3 elements that I see as the basis for this, the building blocks for this. First, governance. What are the resources? What's the plan that exists? We've seen in some countries that they've had problems because they've introduced plans that are not credible in terms of how long it will take or what resources will be available to put them in practice. So it's important to know what the strategy is, what the roadmap is for this digital transformation process to take place. A second element that this transformation rests on is that we need to focus on the citizens. These services must be citizen-centered. It's not enough if we put what we know what to do on the web. We need to focus on those things that citizens need, see how we can transform our services so we can take those needs into account. So it's not a design coming from the aspect of supply, it's a design coming from the perspective of demand. And an element that digital transformation needs to provide to all public institutions, in particular those dealing with pensions, is that using the huge volume of data that's produced and managed needs to be done so that we can improve public policies, because these need to be based on evidence. You can't say, oh, I have a feeling this is this way or that way. You have to be able to support what you say with data, and you have to be able to assess how our public policies will be impacting the citizenry. And from the point of view of the dimensions that we need to consider for this digital transformation, first of all, that concept of the meta process, we need to make sure that we take the perspective of demand and not that of supply. We've often focused a lot of our digital interactions on the idea that it has to be a multi-channel model as well. So there need to be different channels with traceability and interoperability between channels. Usability is another one. A lot of these services, these processes take place, but they're very complex. The language that is used is confusing for the citizen who wants to apply or make use of some kind of service. Then we have what is services that are digital by default, meaning everything is designed to be used digitally. And this doesn't mean that the services cannot be provided in other ways as well, but they are designed for the digital means.
Now, what challenges come up for digitalization? Well, we need to do away with red tape. We need to improve access and also enhance in-person service delivery. If we now move to pensions organizations, and if we wanted to put them in a category, and think about the important aspects. Here I use 4 different dimensions and the specific traits that we look for when it comes to data processing. There are challenges in terms of an organized workflow, also how to manage electronic files, interoperability. These pension agencies need to be able to cooperate with internal systems, but also with third parties. We need to think about everything that goes into identifying an individual, to look at the tax implications into government services and those kinds of controls, and how that sometimes requires third parties. When it comes to services, we need to also think about the fact that in the future, all of these services will need to be delivered digitally, and all of the administrative processes will need to be handled digitally. Therefore, there needs to be a change in how this is designed now. We also need to think about models that have all mediums taken into account. So looking at someone, for example, who is going to use a phone to do something, or a digital device, or other ways of getting these things done. And then the last point is mobile devices. When it comes to these services. And when we move over to information, we see that we need to have these agencies provide a history for why they're there and what they do in terms of volume. We are talking about a huge transformation and the information models that are going to be necessary. Now, if within each of these dimensions you start to incorporate technology, we'll see some emerging technologies starting to come to the top of the list, say automated flows and biometrics and content management systems. And also we look at big data and data analysis, AI and machine learning, blockchain as well. It's one of the key aspects here in ensuring that some transactions are handled appropriately. Now, there are some lessons from this transformation process. The public needs to drive this transformation. Digital transformation should not be understood as digitalization. What's important in a digital transformation process mainly has to do with the transformation part and not the digital part. There are major differences in the different agencies that are part of the central government. When these strategies are presented, we need to think about specifically what agencies are known by and how they can interact with others. Also, finding solutions that are shared, for example, digital identity or document management or digital signatures and others. In other words, not having to reinvent the wheel every time you move from one agency to another. Also, having realistic budgets. And lastly, once again, to make sure that you're not reinventing the wheel when you take on these processes across agencies. Now, in terms of the strategies, you need to have a long-term vision. You need to have a governance model. You shouldn't digitalize red tape. You should focus on linking this strategy to the development model, looking also at agency stability in order to drive the process, identifying priorities. And usually what we need to avoid in all of this too is the idea that with a new administration, it needs to come an entirely new system for doing things. There should be some continuity. Thank you. Well, thank you very much. From what you were saying, what I'm getting is that what we need to make sure it happens is that people are put first. Let me now introduce our next panelist, who is Cicero Diaz. Cicero is the Director for Pensions from the Federal Employee Supplemental Pension Foundation under the executive branch in Brazil. He's an actuary from the Federal University of Czero, who's a master's in economics and also has a PhD in statistics. He is a career civil servant and has worked in accounting and the actuarial sciences at UFPE. He was actuary in Fortaleza Unimed and has also been advisor in the Fanchef Foundation. He is also an actuarial affairs management and services director. He has also worked in social safety nets and insurance. He also has a number of awards and has a certification from the Social Safety Professionals Institution. He was a professor, a visiting professor in the Institute of Research on Applied Economics, or IPEA, and worked on a number of different challenges. He also manages pension funds from the University Center in the Federal District, also specializes in judicial research, and also has a degree from the Brazilian Center of Pension Studies. Thank you very much. Cicero, the floor is yours. Well, thank you. Let me start by saying that I am speaking to you from Brazil, and I'm not sure what time it is in the different places where our colleagues are. And so let me just say good morning and good afternoon, everyone. I will try to speak slowly to make sure everyone can understand. Thank you very much for having me. It is a great pleasure to be here. I'd like to also acknowledge my co-panelists, Alejandro, Gautam, and my apologies for my level of Spanish. I would like to talk a little bit about my foundation, the Federal Employee Supplemental Pension Foundation. I'll share our experience and examples and how technology can help pension systems. Now, let me share my screen. Can everyone see it? Yes, we can. Please go ahead, Cicero. Great. Well, in Brazil, the pension system is broken down into two components, the social and public system and the private system. The social system is also broken down into two different components. One is for private sector employees and other for government employees. It is a public social system, mandatory participation. It is a pay-as-you-go system, defined contributions. The pensions are capped at 6,500 reais, about 1,000 euros. With salary increases for individuals, usually pensioners will need supplemental pension in order to supplement their income. This is something that we are seeing start to kick in Brazil. The private pension system in Brazil has both an open component and a closed component. There are products offered by banks and insurance companies. There are pension funds. There are also trade unions, as well as other groups who can benefit from this system. It is a fully funded system and can be a defined contribution fund or defined benefits fund. Here we see that there is a specific fund for federal employees who work throughout the country. This is a defined contribution plan, and they also can benefit from matched contributions from the employer. This is an agency that has been around for 8 years. We have over 100,000 members with over 185 sponsors, and we administer about 1.2 billion reals. We have over 400,000, we will have over 400,000 members in 10 years. We are going to become the largest pension fund in Latin America. This is a defined contribution fund that is based on building these pension funds, and provides services for financial planning and pension and retirement planning. We know that there are a number of issues that can be linked to poor planning. But there are a few questions here that I wanted to share on how we handle financial planning. And some of the questions we ask is, for example, have you already started to think about your future? How long do you want to live? What do you see your life like at 65, 70, 75? And how would you like to live after retiring? What road should you take, and how should you behave, and how should you prepare? Do you want to plan for retirement or just let life take its course? As I mentioned, When there isn't appropriate planning, there can be a number of problems that come from this. One of them being, for example, lack of financial health. You can die well before what you, the age you thought you would reach. You can lose the ability to work as the years go on. And that is some of the foundational questions we use for financial planning. But we do want to include some rational questions around how to plan for this. So for money in the future and uncertainty and risk. We know that people tend to use some mental shortcuts that can lead to behavioral issues. And I'll give you an example. Some of these cognitive biases are the ones that you see here. This is what we tend to see. Loss, and the pain from loss tends to be stronger than the joy from earnings or from something going right. We have herd mentality, we have trust, we have business as usual, our instinct to want to be like the rest in the group, negative incidents and events, hyperbole in how we think about the future and the present, and also sometimes a confirmation bias. We tend to go more with what we feel and don't necessarily value what is founded in evidence. Now, we want to make sure that pensions can be attractive and timely and appropriate and easy and can be sensible and interesting, just to also make sure that we are taking the necessary steps to plan for the future. So we need to be as attractive as a store that draws you in, for example. Our foundation uses this platform here as the cashback platform. We let our members know that money is going to come back into their accounts. We also have a virtual assistant. Her name is Vic, and she can help address some of the basic issues. And this is how we use AI in this case. Here we have a simulation of the benefits through our platform where you can change a number of different parameters, your contribution funds, your retirement age, your investment, etc. We also use a specific investment profile platform. You can choose from the different profiles. And this is all based on the life cycle model. And you can choose from the most to the least conservative model here. In 2015, we also moved to automatic membership. It shows you here how the numbers increased after 2015, when we went from 33 to 80% membership. In 2021, we're already at 95%. And this is for how many contributors we have from those employed. Here, the members can look at all of the information pertaining to their account via our app. And we know that the use of different technologies and digital tools has helped us to improve a culture for financial planning and pension planning, which is so important for their older age. Here, what we like to remind everyone is that if the benefit of living longer is to have more time, we should also plan accordingly. Well, thank you very much, Cicero. Thank you for that presentation. We have already started to get questions come in. We're going to share them at the end of our session. To introduce our next guest, I am going to speak in English, but again, the Q&A is going to be in Spanish.
Next presenter, it's Mr. Gautam Bardha, and I will introduce it to you now. Gautam is an Ashoka Fellow and co-founder of Pinbox Solutions Singapore. Pinbox is a global pension tech and expert advisory firm committed exclusively to digital micropension inclusion among self-employed women and youth across Asia, Africa, and Latin America. Over the last 2 decades, Gautam has worked closely with several governments, regulators, development institutions, and pension funds on pensions policy formulation and in designing and helping deploy digital strategies and platforms for expanding pension coverage to lower income, non-salaried workers. He served as advisor on pension reforms to the Indian Ministry of Finance between 1988 and 2010. He was one of the architects of the Indian National Pension System, the NPS, that today has roughly 40 million subscribers and over $75 billion in aggregate assets under management. He pioneered the concept of micropensions in 2005 and established a unique social enterprise focused exclusively on assisting financial excluded low-income individuals in India to accumulate micro savings for their old age. By 2015, this social enterprise was helping 2.5 million informal workers across 100 districts of 15 Indian states to save for the old age using regulated pension solutions. He has led several World Bank, Asian Development Bank, the UN Capital Development Fund, and the FSD UK Ed funded projects and studies related to micropensions inclusion. He has served on several governments and regulatory committees on postal, pension, tasks, and financial sector reforms. Gautam, please, the floor is yours, and I remind you, you have 12 minutes. Thank you very much.
Thank you very much for having me on this session. It was a fascinating discussion with the previous panelists and a great session since morning. But thank you again for the invitation and your very gracious introduction. Technology and digital processes can, they can clearly produce rich data, as the previous speakers have also said. And this can in turn dramatically improve our ability to monitor savings behavior, design and test new behavioral interventions and nudges, enable the launch of, let's say, innovative strategies and products such as consumption-linked retirement savings, etc. And I think simultaneously, I think tech can also help to radically improve governance, regulation, oversight, and compliance monitoring of pension systems by providing real-time system-generated reports and data on, let's say, intermediary action and non-compliance. And in that way, I think it can also help prevent fraud or malpractice or mis-selling, etc. So technology clearly can do a lot as far as people who are already beneficiaries of pension systems and, in protecting their rights and interests of pension subscribers. But I think a larger problem is about the non-customers of pension systems, people who are millions of people, about 1.5 billion plus informal sector workers who are not yet in pension systems and are therefore not yet saving for their retirement.
Gautam, sorry to interrupt you, but just to be sure, we are not seeing the presentation as a presentation. We're seeing the PPT. If you can share it as a presentation. Perfect. Thank you so much.
Yeah, you are seeing it. Okay, great. So what I'm going to do is, in this session, I'm mainly going to be speaking about, about how technology can make pensions, savings for old age, and risk management easy and simple, especially for people who are currently not in pension systems anyway. One of the good things, and I think as Professor Burrows also said, I think one very interesting outcome which has sort of accelerated during the pandemic has been the digital ecosystem evolution. And I think most countries have spent billions of dollars in the last decade on building incredible infrastructure and ecosystem for financial inclusion, for digital finance. And I think the adoption of digital finance has accelerated beyond, I mean, it's sort of leapfrogged in the last 2 years during the pandemic. And we've seen people who were otherwise outside of digital finance now routinely using digital payments and so on and so forth. So one of the things that I think clearly seems to exist is that across developing countries, and we work extensively in Africa and Asia at the moment, we see that in almost every country, we see that the ecosystem pieces or the building blocks needed for mass scale pension inclusion, especially among self-employed women and youth who currently may not be in pension schemes. The ecosystem for enabling mass scale outcomes already exists, whether it is in the form of policy or regulatory frameworks, or a lot of countries today have digital national IDs. Payment adoption has gone through the roof. I mean, in Africa, there are countries where people just don't carry cash anymore. I mean, even in India, you have about 350 million people who are using digital payments on an everyday basis. You have extremely sound financial institutions. I think their ability to produce very attractive savings and insurance products and pension solutions is clearly there, and their ability to deliver real returns, which are positive real returns over multiple decade horizons. I think that ability exists. And other than what, again, Professor Burrows mentioned, I mean, you're seeing mass scale mobile penetration, smartphones increasing dramatically. And of course, you've got, I think, developing countries have this unique thing of, grassroots level organizations or community-based organizations like cooperatives and microfinance firms and others who can play a vital role in demand aggregation and financial literacy. But yet, I think what is happening around us is that about 1.5 billion people are neither prepared nor preparing for old age. And I'd like to just focus on this population. And the question then is, what are the barriers? I mean, what are the demand and supply side barriers that are preventing thrift and self-help by lower income workers as far as retirement savings are concerned? I mean, I have to admit that this is at best, a sort of a superficial and a very simplistic view of the challenges. I'm sure, I mean, it would probably take me an hour to list out various kinds of challenges that we are observing across different countries. But I'm hoping, and I feel that some of these challenges may also resonate in, say, Latin American countries. The first, of course, is that while the ecosystem exists, and while the digital finance infrastructure exists, it is still fragmented. It doesn't sort of come together. All the pieces don't come together by themselves in solving the pension exclusion problem. And as a result, there seems to be no easy and simple way for most people to save for old age or to manage their life cycle risks. I think in this, what we see is that there is a great role for technology to sort of use APIs to integrate the digital finance ecosystem, including digital ID or payments or products or the governance ecosystem, and therefore be able to allow a country to sort of use or leverage the existing ecosystem to switch on a national pension insurance and savings marketplace with easy and secure access. So it's feasible to build a system pretty much from scratch at a near zero capital cost by just simply leveraging existing digital finance ecosystem pieces that might already exist. And we've seen this happening in countries in East Africa. We've seen this happening in countries like India. We're trying to do the same thing in Bangladesh. And in most of these countries, it is feasible to do so. The second challenge is also a sort of a supply and demand kind of a challenge, which is that while the aggregate demand, from the currently excluded young workers who are not participating in pension schemes or pension systems, if you aggregate the latent demand for retirement savings, this would be gigantic. This would be larger than the GDPs of most countries. But when you look at trying to address this demand using the traditional sales and distribution models of finance firms, we find that the way the incentives are structured, the commercial incentives are structured, agents really have very little incentive or interest in delivering small ticket pension and insurance solutions to lower income people. It just becomes, so while the demand is very attractive and commercially feasible at an aggregate level, it becomes completely unviable at a disaggregated level, both for finance manufacturers and distributors. So again, I think there is a role for demand aggregation where if a marketplace has been created, then it is feasible to provide free plug and play access to a number of aggregators like women's cooperatives or banks or microfinance firms or gig platforms or gig employers, and allow them to then in turn use this platform and this free access to cross-sell pension solutions and retirement solutions to their members or employees or clients. And they can achieve this outcome without the need to build their own proprietary technology or new capacity from scratch. The third is, I think, around the friction and digital literacy. I mean, across countries, I find that it's to set up a pension account or to open a pension account, one needs to fill up a complicated application form or go through some cumbersome KYC process. And it becomes very difficult to do this without an agent. And if the agents are not willing to help, especially if you are a lower income person and you don't have enough savings, then this creates a lot of friction at the front end, and it sort of inhibits mass scale voluntary participation in pension systems. The second thing is that if we have to bypass agents, the only way to do that, which is today feasible, by the way, is to use as much of digital delivery as possible. But the problem with digital delivery is, as we heard in the previous session as well, is that it requires a lot of new digital literacy. I mean, so if we have to then, let's say, if I have 500 million people in India who are currently excluded from pension arrangements, then one needs to, publicize a new pension app and then convince these people to download this app and learn this app from scratch. And we've seen how each of us might have 100 or 150 apps on our phone, but we invariably just use the same 4 or 5 apps. Most of the apps actually never really get used. And so digital illiteracy and friction could be important challenges. And to a large extent, it is feasible to use, let's say, for instance, something that we are now trying in India and we've just launched in Kenya as well, is where you use, instead of forcing people to use new complicated apps, why not allow them to use existing open digital platforms like, say, WhatsApp or USSD, etc., and allow them to use such apps to set up a pension account or open a pension account. I mean, if I, let's say, look at what we're doing with WhatsApp, it's a very simple and familiar user interface. You don't have to teach people how to use WhatsApp. There are about 2.5 billion people across the world who are already using it. In India, there are the same 500 million or 600 million people are actually using WhatsApp today. 85% of them don't have a pension account, and half of them are women. So for them, we don't have to force them to download or learn a new app. This sort of helps to sidestep the digital literacy efforts that we need to make. And interestingly, like in India, you have 14 regional languages other than English and Hindi. So therefore, building an app for 16 languages would be complicated. But WhatsApp has already built the facility where I can interact with WhatsApp in whatever language. If I'm sitting in Peru or in Chile, and I want to do, talk to somebody in Spanish, I don't have to do anything new. My WhatsApp actually works in Spanish as well. So this, optimizes access. It lowers friction and transaction costs, and increases the probability of people more willingly stepping forward to participate. The last challenge that I'll mention is affordability. I mean, the typical point that we are told in across markets is that a lot of informal workers are daily wage workers. They don't really have enough savings. They can't really afford to save for retirement. And when we spoke to a lot of people during the pandemic, in India or other countries who fled big cities and ran back to their villages during the pandemic, and we were wanting to know why is it that they didn't have any savings, what we found interestingly was that most of this population was actually saving and saving regularly, and probably saving a disproportionately higher percentage of their incomes than higher income people would. But why was it that they did not still have any money? And why is it that within 20-30 days of a lockdown, they suddenly had no money for rent or food and were forced to leave their homes? And we found that the main reason was that they did not have insurance. And if they didn't have insurance and they faced life cycle risks, they were actually using past savings to pay the full cost of the risk. So if there was a child who was unwell, or a crop had failed, or a cow had died, or there was an accident, for all of these risks, which are all insurable risks, people were actually using past savings to pay the 100% of the cost of the risk. And if the savings were not enough, they would go out and get expensive emergency loans. And using savings and expensive loans for risk management, as you can all imagine, is hugely inefficient. And it leaves no room for savings, because I have wiped out my past savings. And now I have, instead of saving in the future, I now am forced to repay an expensive emergency loan using any surplus income that I might have in the future. The second problem that we found was that a lot of people in the informal sector actually can't save large lump sum amounts, and financial firms typically want you to save some minimum threshold amount. But we found that if, let's say, in countries like Nigeria, 60% of the population is practically on daily wages. So there is no way that these people can accumulate large sums to be able to save on a monthly cycle. So instead of which, I think it is feasible to use technology at two levels. One is to integrate liquid savings and insurance products with pensions, to sort of take care of risk management and liquidity constraints, and simultaneously make link micro contributions with income, and allow, let's say, an Uber driver, instead of forcing an Uber driver to save $50 a month or $100 a month, allow the Uber driver to save $2 or $3 a day in line with his income. And suddenly, by using technology, you can not only make it more flexible, but you can actually make saving for old age more affordable for people who were otherwise not being able to do so. This is just a diagram. Are you able to see the diagram clearly? So what happens is, the way we think about this is, imagine a centralized technology platform. At the back end, you have all of the current ecosystem pieces and infrastructure for digital finance, which already exists. And you simply do API integrations with the national ID, with fund managers, with insurers, custody banks, and payment gateways. Once these one-time API integrations are done, then at the front end, it becomes very easy for anybody to use any device. The professor spoke about interoperability and omni-channel approaches. And that's exactly what I'm talking about, which is that you can actually use a phone, you can use a tablet, a laptop, or any device that you want to access this marketplace, and to be able to easily set up a pension account, or buy insurance, or save in a liquid scheme. And in terms of contributions, you can use any digital wallet. And today there is an oversupply of digital payment instruments. So you can use any digital wallet or your bank account to regularly put money into your pension account in line with your income. So if you're an Uber driver, you can use your mobile wallet to actually put, say, $2 a day into your pension account, and with zero penalties for having missed contributions. And if there is a challenge or a problem, or if you have any questions, there can be a simple national helpline which can deal with individuals and provide them a human interface. And at this end, what we are saying is that individuals left to themselves while they are young may not still wake up to this retirement need. While you can make the whole thing easy and simple, there is still a need for education and awareness and financial literacy. In that context, providing that simple plug and play interface to cooperatives or gig platforms or MSMEs or MFIs or banks then makes it easy for them to deliver financial literacy and then cross-sell this idea to their constituency and their customer base. I'll give you an example of, let's say, one constituency, which is domestic help. Now, domestic help or domestic workers, typically a lot of them are women, and there are almost 200 million of them across the world, typically are very difficult to locate and educate and onboard for, say, pension solutions. So one of the solutions that we've developed is something called gift to pension. I'll just play a short video which helps you to understand what gift to pension is and how it works.
This is Shanta. She's 22 years old. She lives in a little village far away with her husband and 3 children. But her family finds it tough to make ends meet. So Shanta decides to migrate to your city in search of work. You employ Shanta as your maid. She works long hours. She takes care of your children. She cooks your meals and keeps your house clean. She sends most of her income back home to support her family, to put food on their table, and to send her children to school so they may have a better life than hers. She does this year after year after year. When she's too old to work, Shanta returns home to her little village. Her children are now grown up. They're educated and married but have migrated to the cities. Shanta and her husband now live alone. But with no savings of their own, they struggle to make ends meet. They live without dignity and will live this way for the rest of their lives. But does it really have to be this way? Let's see this again. You employ Shanta as your maid. You talk to her about the importance of setting aside a small part of her income for her old age. Then you spend just 5 minutes on WhatsApp to help Shanta open her own pension account. And you get her started by regularly putting some money into this account for her old age. These savings will be managed by the likes of HDFC Pension and SBI AMC and will grow over the years. When she is too old to work, Shanta will return home to her little village. She and her husband will still live alone, but they won't struggle to make ends meet. Thanks to you, they will now get a monthly pension and will live with dignity for the rest of their lives. This could be the story of your maid, your driver, your gardener, or guard. Just 5 minutes of your time can change 20 years of Shanta's life. You can be that change. Gift Shanta a pension account today. Her clock is already ticking.
I don't know whether I have any more time. I just wanted to quickly tell you this very brief story about this goat. But what I'm saying is that if we can use technology well, and if we can take the rocket science out of the front end, and focus more on making sure that the front end is easy and simple and uncluttered and frictionless, then it is feasible for people to be able to very rapidly set up accounts. And the time and effort that we are saving on onboarding and on the transactional side can then be devoted more on things like financial literacy. So one of the things that, and this can actually work. I mean, this is quite a small example. When we were rolling this out in a place in Karnataka, in a small village, we found there was this lady called Cicero, and Cicero used to be saving regularly. We were looking at her data, and not only saving regularly, but she was also inflation indexing her savings. And we were very curious as to how she was managing to inflation index her savings, and how was she so wise about inflation. So we went and met her, and what we found out was, she said that she runs a goat farm, and every year she nominates one goat as her pension goat. And when there is Eid, which is the Muslim festival, she goes into the market and sells the goat, and whatever money she gets from that goat, she simply puts it into her pension account. I mean, this was actually fascinating. I mean, we'd never really discussed using goats to save for retirement, so we were actually very thrilled. But we said, listen, Cicero, how are you inflation indexing your savings? And she said, well, Gautam, I'm actually not doing anything at all. That's all being done by my goat. 2 years ago, I sold this goat for 3,000 rupees. Then last year, it sold for 3,600 rupees. This year, I sold the same goat for 4,200 rupees. And next year, I'm sure I'll sell the goat for 5,000. So the inflation indexation is actually built into my goat. So what I'm saying is, I think if we can crack the problem using good technology, we'll be able to focus on financial literacy better. And individuals then will be able to use the knowledge and the systems in ways which could perhaps even surprise us. Thank you very much.
Muchas gracias, Gautam, por la inspiradora, de la verdad, presentación.
Thank you very much, Gautam, for that very inspiring presentation. Our region is one that has a significant proportion of workers working in the informal economy, and the pin box solutions would be great if they had access to them. If you need interpretation,
If you speak Spanish, you are welcome to answer in English or in Spanish. Procedemos con las preguntas, si les parece. Nos quedan
let's
muy poquitos minutos.
proceed with the question. We have very few minutes left, but
Les invito a pasarnos un poquito del tiempo.
maybe we can spend a few more minutes.
Direccionada para Alejandra, pero que invito a los demás. Voy a agregar un par de cosas para que
The interpreter apologizes. The audio is not good. Something is happening with your microphone, Paulina. Is that better now? Yes.
La primera pregunta, entonces,
The first question then, as I was saying, is for Alejandro, but it consists of two parts, and I'll ask Cicero and Gautam to also answer the second part. The question is, how can we push pension institutions to innovate, to leave the status quo behind in terms of in-person services and promote interaction with third parties such as fintechs in order to facilitate savings for more people? Also, I wanted to add, there's a significant gap between a well-designed solution of this kind and the implementation that can still be difficult. An example, in the case of Chile during the pandemic, there was a law that allowed for interactions without an identity card, even if it was expired, for Chileans and for foreigners, and that law existed. But when you wanted to access that benefit, maybe the website wouldn't allow you to because it was expired, or the person who was dealing with you was not aware of it, and so you didn't actually benefit from it. So it was a good design of the policy, but it wasn't implemented well. And in the same regard, we have a question for Cicero. How do you deal with this kind of restriction or constraint that's related to literacy in general, or education level in general, or resistance to change within the Brazilian system? Go ahead, please, Alejandro. Thank you very much, Paulina. Two comments. One, I think what the pandemic did was to accelerate that digitalization process, and it did it in a very forced way. So maybe one of the challenges we have looking forward now is all these processes and interactions now that we put on the web, to make sure that we do it well, because sometimes we try to replicate in-person interactions online, but there's a lot more of transformation than digital in it. The digital aspect is just so we can leverage the transformation. And I'll connect this to the idea of the pillars. I was saying that one of the pillars is citizen-centric services. This means that I need to think about the needs of my beneficiaries and not just digitalize the things that I'm already doing. I need to digitalize what they need. And a good example of this is that example where we linked it to interoperability. What does the government do, and what do pension institutions and others do? When I'm going to apply for a pension, what happens in many countries is that they say, bring us your birth certificate, your tax documents. So that process that this person wants to do, which is to access their old age pension, turns into 15 different things that they need to do. And that transaction cost is placed on the citizen, and it doesn't solve the problem. The problem that this citizen has is not that they want to get their birth certificate. What they want is to get their retirement pension. So the challenges for public institutions is, how can we take over that requirement and deal with it? So that's about your first question. Now, the second question, and I'll conclude with this, is we have a lot of great rules and regulations that look very nice on paper, but when we want to implement them, they don't work out well. And I'll give an example from Chile. You might be familiar with it. The administrative procedure law that regulates all acts by the state from 2004 states that the government cannot ask the citizen for information that the government already has. It is now 2021, and the government continues to require that citizens provide information that the government already has. So we're not abiding by that law. It's much easier to put something on paper than to actually enforce it. So there's a big disconnect between the world of political science, economists, and lawyers, and the world of those who then have to implement that ultimately and turn it into a process, a technology, etc. Thank you, Alejandro. Cicero? Well, regarding the first question, we need to test out technologies, and experimentation is important, explore open innovation ecosystems, and take advantage of technologies that already exist, similar to what Alejandro was saying. We need to see how we can reach the greatest number of workers, and we're still making efforts. We have people, a lot of people who could be members and are not. We're talking about federal public employees who, in theory, are financially literate. We have many different profiles: professors, auditors, lawyers, police officers, doctors, etc. So increasingly, we need to offer digital products and services, but also we need to personalize those products in order to attract more people and to our social security system. It's a big challenge, and it's difficult, but we need technology and digital technology and models, but we also need to tailor those products better. Gautam?
Thanks, Paulina. I think, as Alejandro said, I think the problem is not so much, or the solution is not technology by itself. If you think about it, a lot of the friction is actually caused by poor regulation and a poor understanding of the needs of the majority of citizens. Technology, once you've imagined a good solution, once you know what you want to build, and once you can design something which is optimum, I think then technology becomes the enabler. Technology can help to deliver that. Just to give you an example, I mean, let's say, for instance, a lot of people in India are not able to open a pension account because having a tax ID is a prerequisite to open a pension account. Now, 4% of Indians pay taxes. I mean, so automatically, by just this simple rule, you seem to be excluding the majority of Indians who might otherwise be interested and capable of saving for retirement. So my limited point is, though I run a fintech or a pension tech company, I believe that the role for pension tech is in enabling the implementation of well-designed systems and well-designed processes. I think regulators need to, one of the challenges that we are seeing is that consistently, whether it is in securities markets or insurance or pensions, a lot of the products and a lot of the regulations around products and rules have been designed keeping formal sector salaried or higher income individuals in mind. So, when you build systems which assume a certain profile of a citizen who's going to participate, you automatically, you tend to miss out a lot of people who would otherwise be interested and be more meaningfully targetable. Simply because, and we are not being able to do that purely because we've designed a system which perhaps specifically excludes them rather than specifically including them.
Muchas gracias. Cicero, una pregunta específica.
Thank you very much. Cicero, a specific question being asked by someone in the audience. In percentage terms, that complementary pension in Brazil, how much does it represent? The percentage of contributions is 8.5% from the salary, and this is above over 6,500 reais. And this goes together with the employer's contribution to make it 17%. Okay, Gautam, a question from the audience. Do you have any examples of regulatory frameworks in the countries where you work that either favor or hinder the promotion of micropensions?
Well, we worked in about a dozen countries in the last 4 years. And each of these countries actually have the necessary enabling legal and regulatory frameworks for micropensions. In fact, Rwanda was the first African country to launch a completely digital government-sponsored micropension scheme, which today, in less than 3 years, 25% of the informal sector workers have already opened pension accounts in this program. Similarly, we've got Kenya evaluating the same thing. Nigeria has just launched. India has a national program for informal workers for micropensions. Uganda is launching again a national scheme, which is again government sponsored. So my sense is I don't think the regulatory or legal frameworks are challenging. I think they're very conducive. I'm not terribly sure about Latin America. A lot of the pension systems were designed, 2 or 3 decades ago, but largely keeping salaried workers in mind, because salaried workers are a fairly large share. But today, even in developed markets, in OECD countries, we find that the number of self-employed, the number of gig workers, the number of people in micro enterprises is increasing, and they're just not, while the enabling framework is there, they're not able to participate in formal pension arrangements.